This video is going to be the only one all over YouTube that exposes exactly why your funds get frozen, the real reason this issue arises, and how you can fix it. The video will be long and technical, so I will leave the timestamps so you can skip directly to what you need. But if your business has substantial revenue, I invite you to watch the whole thing to understand how everything works and how you can resolve it. Many of our clients run e-commerce businesses. Some are just starting out but scale very quickly. For them, terms like merchant accounts or payment processing sound familiar, but they don't fully understand them. Others have been in the game for years and already know the real problems. One of our main areas of expertise is helping international online sellers. In simple terms, payment processing is the ability to accept payments, whether in a physical store or online, between individuals or companies. But our focus is on online sellers who operate globally and scale fast. The biggest problem in this niche is that extremely hard to find a reliable and stable payment processor. That's why this part of our business works, because we connect clients with processors who actually want to work with them. Whether you're operating from Dubai, a tax haven for many online sellers, from Europe with stricter regulation, or from Hong Kong, the US, or Latin America, you don't have to search for solutions alone. We guide you toward what best fits your business. The common mistake is thinking that payment processing is the same for everyone, but it's not, especially at the global level. If a provider lacks local payment methods or currencies in a specific region, your conversions can suffer dramatically. Also, many providers make promises they don't keep. They lack solid technical integrations, redirect to external payment pages. There are countless nuances that can harm new sellers. We help them find the best fit, avoid frozen funds, and have someone to turn to for support. Why does this happen with processors like Stripe, Shopify Payments, or Air Wallets? Many businesses scale and suddenly, boom, they have issues. Withheld funds, or self-placed, or even the whole account blocked. Why does this happen? Why can't it just work even if you are scaling to, say, 5 million per month? There is a key factor here. Time. The environment today is very different from a few years ago. For those who don't know, when Stripe was a much smaller company, signing up was super easy. Stripe functioned as a payment facilitator, meaning you could integrate instantly without too many hurdles. We still use it, along with other providers, but a lot has changed. Back then, Wells Fargo was Stripe's sponsoring bank, which allowed them to take a lot of risk and make underwriting decisions independently. But that partnership ended. Now they have a new bank with stricter criteria. This has made it harder for many online sellers, even those operating locally. There are also many risk factors sellers don't know about. For example, we receive multiple cases each month from sellers with frozen funds. Selling internationally is higher risk as cross-border fraud is more common than domestic. For example, if you are doing dropshipping, that's also considered high risk. Not having stock, manufacturing on demand, depending on the supply chain, all that can lead to problems. Refunds, complaints, chargebacks. What you sell also matters. If you are selling medical devices, products with bold claims or guarantees, or if you use aggressive upselling strategies, those all raise red flags. Even your online reviews can trigger a Stripe review. Everything is stacked against online seller. Even more so if you sell internationally, and even more if you do dropshipping. On top of that, Stripe is now more regulated than ever. With Shopify Payments, it's similar because it runs on Stripe. Shopify and Stripe have a strategic agreement, but Shopify must still follow Stripe's rules. They have some flexibility, yes, but at the end of the day, Stripe makes the calls. Air Wallets offers a bit more leeway and we work with them a lot, but they also have a bank behind them, like JP Morgan in the US. There is always a financial institution in the background imposing their conditions. So why don't these problems show up from day one? Because at the beginning everything seems to run smoothly, but as soon as you grow and make more money, the account gets flagged, phone gets held, or the whole thing is shut down. One of the most important things any online seller can do is communicate. Think of your relationship with your payment processor like a relationship with a partner. If you are about to scale or do something out of the ordinary, you should communicate your business plan in advance. What often happens in dropshipping, for example, someone finds a winning product or ad and suddenly jumps from 10,000 to 150,000 a month. that will be flagged for sure. Many are young sellers just hitting their first success, or business people who didn't spend enough time on a proper business plan or just forgot to notify anyone. That's why you need to prepare a scaling plan. We do this with many clients who want to prepare for growth. I'm testing this market. I expect sales to rise. As soon as scaling begins, you should notify them because they will detect it anyway. And while you may think notifying them triggers a review, it's likely to happen either way. The difference is that if you have already prepared everything, have solid supply contracts XYZ, that makes a big difference. There are ways to prevent freezes, but the best mindset is to assume that if you grow too fast, you will be reviewed. So it's better to be prepared than caught off guard. Every business should have a plan. If all you have is some half-back notes scribbled on paper, that's not ideal. You can create the plan yourself or use a template like ours, specifically approved for banks and payment processors. You should outline your market entry strategy, entire entity location, target markets, supplier contracts. It must be a formal document, a real agreement. If you do dropshipping, you should be able to prove delivery timelines, show tests, proof delivery dates, a plan that demonstrates you are a legitimate business, not a scam. Because if you scale quickly, the system may mistake your pattern for a scammer or money launderer. But if you have a solid business plan, that helps a lot when a real person reviews your account. If you don't have one, they will ask for everything afterward. If you do, you are more likely to get the freeze lifted quickly. Now let's talk about account manager. This is something many clients ask us, even those who are already making a lot of money. It happened to me too. Back when I was selling e-com products through my automated channels, everything was going fine, but I kept thinking, everything I have built over the last 2 years depends on Stripe. What if they block me tomorrow? Even though their online support is decent, there is no real person to talk to. It's the same with fintech banks. You can use them, but it's not the same as having a personal account manager or private banking. So when does it make sense to move from Stripe to a provider with a real account manager? Some switch too early without needing to, and others switch too late. What's the right timing? My advice, you should always be preparing for that shift. Stripe is unpredictable in many ways, and I don't say this as a criticism. Good account managers I talk to regularly, but the reality is that Stripe is changing its business models. They used to focus on making payments acceptance easier for digital startups. Now they are evolving into a full-scale financial structure. They have launched Stripe Connect, Stripe Tax, their dashboard, and even allowed third-party processor integration. So while it's great to use Stripe, if you are processing large volumes, you need to start diversifying. So when? That's the question we get all the time via the contact forms, and I always say, once you are hitting around $100,000 to $200,000 per month, you should already be exploring alternatives. You can start with Shopify, Stripe, Air Wallets, then move toward larger processors like Checkout, Aiden, Paysafe, or Nube. There are plenty in the global market. We already have relationships with account managers in all of processors. They know us, and when we onboard a client, we assign them directly to a dedicated account manager. Most clients don't have problem because we do everything properly and give the processor all the right info. The few who don't run into troubles are the ones, in practice, do something different from what they told the processor. When talking about payment processing, your company structure and banking setup also play a key role. We have many European clients or clients living in Dubai, operating with a US LLC, selling in the US and in other countries. It can get confusing. Many clients operate from Dubai for the tax benefits, but set up entities in the US like Wyoming or Delaware LLCs with a registered agent address, and here's where two key factors come in: payment processing and banking. Also, you must pass two filters: KYC, KYB, know your customer, know your business. This used to be more relaxed. That's no longer the case. You must comply. For example, maybe you need a real residential address, no PO boxes or virtual addresses, a government-used ID, a social security number or ITIN, a utility bill, electricity, gas, internet, your name as proof as resident. Of course, you can have your US LLC with a registered agent address, but the key is having a real physical address, and you don't need a giant office. It can be a co-working space. A monthly lease of around $300 can be enough. $200, $100, $100 per month. What matters is that you can receive mail there and the address is verified on Google. That complies with Visa MasterCard regulation for being considered a local entity. If you are missing one of these elements, you are in a gray area. It might work or it might not. And if you are generating hundreds of thousands of dollars a month, you can't afford that risk. You must comply, and this applies globally. Each region has its own requirements. Most of our clients are not already in the US. I would say 90% are outside the US looking to sell there, or in Latin America, or in Europe, or in Asia. And I think we can add a real value because I, along with my colleague who is currently between Thailand and Cayman Islands, serve as trust points of contact, providing real, direct insights into regulations and internal operations. We are the ones who explain this in detail. We have personally evaluated every provider we work with. We have stress tested them. This industry might seem massive from the outside, but it's actually a tight-knit web. Everyone knows each other. Just like in e-commerce, top sellers know each other. Same thing in the tax planning world. I know a lot of people in the industry in Spain because I'm from there, and you can easily tell who actually knows their stuff. And if I don't know someone personally, I know someone who does. We are all connected. This lets us act as a direct bridge between merchant and provider, so clients don't waste years trying to break those. We have seen these processors in action. We know their teams. We only work with trusted providers. No shady move, no unjustified fund freezes, and we work across almost every e-com and digital product niche. Any type of product or service, we can find a payment solution anywhere in the world. Depending on your specific needs, we assess the case to see if we can assist. And sometimes, if we can do it directly, we refer you to a competitor who we know can provide a proper solution. Obviously, the competitor pays us a commission, makes sense, there is plenty of pay for everyone. But if we can help, then we analyze your business structure from a tax standpoint, from we assess whether it's optimized. For example, do you have your entity in Belgium? Is your US LLC the one generating most of your revenue? We review overall operations to ensure your structure aligns with your long-term tax goals. For example, if everything is running smoothly, no blocks, but the client wants to optimize, we analyze whether current providers like Stripe or Shopify Payments are offering the best terms. Often, there are lower cost alternatives, so we start comparing. With this processor, you would save this much, plus you would gain access to more local payment methods. We also check if Stripe or Shopify are applying excessive reserves. Sometimes, another provider offers more flexibility. Diversification is a hard argument to reject. I don't want a backup processor, so that's often one of our first conversations. As you know, payment processing is no longer where it used to be a few years ago. Today, you need a structure, strategy, and support if you want to scale, avoid freezes, keep your funds safe, and operate globally. And this is where we at Elite Fiscal can help you. As you know, we are not direct providers, nor we do work within Stripe. We collaborate with a wide network of global providers, just like we do with banking. This gives us access to advantages and benefits you wouldn't get directly, whether in payment processing, support, or compliance services. That's why, if you are interested, we recommend filling out the form so we can call you directly. No 3K for a call, okay? No 30K for an ABS company, an IBC, no. You fill out the form, we call you, we give you a solution. If you want to accept that solution, perfect. If you don't want to accept this solution, no problem, no worries. Let's see in another video.